To WTR on the Horizon podcast. I'm your host, Joe Brunetto. I'm director of WTR Horizons and business analyst here at Water Tower Research. In today's episodes, I'm pleased to be joined by Sam Teo, acting chief executive officer of Treasure Global Inc., NASDAQ ticker symbol TGL. Good morning, Sam, and thank you for joining us on the podcast today. We recently launched our initiation of coverage on Treasure Global, so I'm really excited to take a deeper dive into the company and the story, the strategy, and the growth opportunities there. So happy to jump right in here. Sam, welcome to the podcast. For investors meeting Treasure Global for the first time, can you give us, maybe a little bit of an elevator pitch? Who is TGL? What are the problems you're solving in Southeast Asia's digital economy?
Oh, sure. Thanks for having me. Treasure Global is a digital e-commerce and engagement platform built around our Z City super app. So, at the simple level, we connect consumer and merchants in a single ecosystem. So, user can discover, spend, earn rewards, and keep coming back. In contrast, merchant get more repeat customer and lower acquisition costs. And the problem we are solving is fragmentation. In Southeast Asia, users jump between multiple apps to shop, pay, and collect the rewards. Merchants, especially for the small medium enterprise, struggle to understand and retain their customer. So we sit in the middle as an engagement layer, helping both sides get more value for every transaction without replacing existing payment or e-commerce system.
Awesome. Excellent. Appreciate you again giving us a quick overview there. I think that gives us a great starting point into today's conversation. So I think even if we take a step back and kind of take us back to the almost the founding vision here, how did the company evolve into the Z City super app? What was the insight about Malaysian consumers and merchants that shaped the platform?
Yeah, we started as a simple reward platform, but over the time, we saw something important. Rewards alone is not enough unless you are connect them directly to the merchant value or real transaction behavior. So ZCity evolved into a broader ecosystem, e-commerce, loyalty, data, and now AI-driven personalization. The core idea has stayed the same, make every transaction more variable for both the consumer and the merchant.
Perfect. Again, simple and easy there. And then I think, going off of that, it looks like about, Southeast Asia has about 545 million internet users, I think, as of maybe some of the recent data that we've seen. Yet payments, e-commerce, and loyalty remain highly fragmented markets. Why is super app model, the right answer to that fragmentation, and why is TGL positioned to deliver it, the best?
Yeah, now the region is very fragmented. Different apps for payment, shopping, voucher, and loyalty is all disconnected. A super app style model work because it brings those touch points together into a single loop, increasing the repeat usage. But we are not trying to replace Grab, Shopee, or other payment wallet. We sit alongside them, adding a layer that improve engagement and retention, especially for the small medium enterprise that need stronger customer stickiness.
Excellent. Excellent. Great. So before, just as a quick one right here, before we kind of move into a little bit more about the Z City platform and more about your business model, is there anything just about the TGL story that you'd want to, let investors, hear before we move on?
Sorry, Mara is okay again.
No, no, no worries. We'll cut that part out. I was just wondering, and
Uh,
again, if
Sorry,
again,
Joe. I'm sorry because I saw that my background sound is very noisy. So
oh,
maybe I will move another place. Just give me 1 minute.
yeah, yeah, no problem. I can't hear it on my end, so it's all good.
Yeah, just give me 1 minute. Sorry. Hi, Joe.
Hey, Sam.
Yeah, sorry.
No worries.
Yes, yeah,
A
now we
little
can
bit.
continue.
Yeah,
Yes, I
perfect.
said
It's
that.
better. It's better on your end now.
Yeah,
Okay, perfect. Cool. All right. Yeah. So again, we'll cut that part out there, and we'll start right here again. So again, perfect. I appreciate you taking us through the TGL story there a bit. Now, maybe if you could walk us through Z City from a user perspective. What does the spend, earn, redeem cycle look like in everyday life, and how does that rewards on rewards model keep users coming back?
yeah, I think that for all the user, basically, they have to looking for the super app, which is then cover the reward to cover their monthly spending. So at ZCity, we build as an aggregator. That's why we connect the both merchant and user together and provide the payment. So for user can make the payment easily and also get the reward for the next purchase. That's why we are here. We are connect, we are aggregator. We are not replaced for any super app like Grab or Shopee, but we are sit alongside with them.
Awesome. And then so at least, and correct me if I'm wrong here, but you serve two customers, right? So it's the consumers and the merchants. How do you monetize each side there, and how does the dual-sided model reinforce itself as the platform scales?
Yeah, we serve both consumer and merchant. That's why consumer use the app for reward and discovery, and merchant will pay for the participation, campaign, and platform services that help them to drive the repeat customer. So the key is this: as a merchant to see better repeat sales, they will stay longer, and as a user to get more value, they will come back more often. Both sides reinforce each other.
Excellent. And I guess as we look at some differentiation, at least as from what I saw in my perspective, it seems that you and your company kind of highlight this AI driven personalization. So it's really this data flywheel that you have. How does the user data actually translate into better targeting, higher engagement, and really it's just a stronger overall ROI?
Yeah, every interaction inside the app will teach us something. With the data, we should be know that what user buy, when they buy, and what they respond to. That's allow us to personalize the offer and campaign better over the time. So with better targeting means better conversion for merchants and better relevance for users. So the loose keep compounding. That's why we always call our data flywheel.
Excellent. Excellent. No, that's great. And then just kind of as a last one in terms of just kind of your business model here, you describe the model as asset light. Could you just talk a little bit about what that means in practice for capital requirements and operating leverage, especially as transaction volumes grow?
Yeah, we don't have heavy physical infrastructure, so that keeps the model is more flexible. As transaction volume growth, costs don't scale at the same rate, so we naturally get operating leverage over the time.
Perfect. That's great. No, again, excellent. I think we just did a great overview of the business model there. And if anyone has any questions, you could obviously submit them via our portal, and we will get them to TGL as well. So let's turn to Catalyst here. The metrics that jump off the page for me at least, definitely ARPU, up from $213 to $1,506 in a single quarter. That's a 707% increase. Could you talk a little bit about what drove that step change and how sustainable it is?
Yeah, they definitely will increase to reflect the stronger monetization per active user. They are not just more user, but more activity per user and more value per transaction. So it's driven by higher engagement and better contribution for our loyalty program and also the merchant program and campaign. This is a strong signal, but not something to model as linear every quarter.
Absolutely. No, I agree. And so you just touched on this a bit, and I guess it's around that engagement quality. So and how it's shifted really, pretty dramatically. Um, so I guess I think it said about 70% of paid users now transact three or more times per quarter versus about under 5% a few years ago. What does that tell you about where the platform is in really the scaling curve?
Yeah, now we are seeing user move from the occasional use to repeated usage. So a much higher share now transact multiple times per quarter. That's why the result tell us the platform is becoming part of everyday behavior, not just for the fresh deal or just a campaign. Actually, they are repeat sales every day.
Excellent, excellent, great stuff there. And kind of moving into one of the catalysts, and one of the catalysts that's hard to move away from right now is AI. And you've made some bold moves in AI. The AI cloud infrastructure initiatives backed by, I think it was a 16 million US dollar service agreement with V Gallant, the Silica-AI partnership, and Malaysia's first AI digital human live commerce hosts on TikTok. Which of these AI initiatives do you expect to contribute revenue first? How do they really fit into your core platform?
Yeah, actually, we are working across the three areas. The first one should be the live commerce tools, enterprise digital solution, and also the AI-driven content experience. So we call this is a digital human. I think the first revenue you expected to see is from the enterprise deployments because those are structured, service-based, and also closer to commercial rollout.
Awesome. Great. No, exactly what we're looking for there. And then if we switch a little bit on to the enterprise side, you also won an estimated, I think it was about 2 million US dollars for a smart campus contract with ELMU Education Group. How big is this? Is the enterprise and smart infrastructure opportunity for you? And is there a pipeline behind that first win?
Yeah, the project is very important because it's validated our enterprise capability. It's not just a contract, actually it's a reference site. Once we have one working deployment, it's become repeatable across other institutions and also enterprise client as well. So this is open the second growth track alongside our consumer ecosystem and also strengthen our revenue stream.
Perfect, perfect. And then just again, as we go through some near-term catalysts, I think it looks like Tasty, your F&B merchant platform is in kind of a redevelopment phase right now, and you have I think it's an MOU with the Malaysian Retail Chain Association covering 500 plus merchants now, and I think that's what's that, more than 40,000 outlets. What should investors expect from that relaunch?
Yeah, now Taste is being rebuilt as a part of our merchant ecosystem strategy. So basically, we are strengthening and enhance all the back end, also including the AI-driven technology. And we through the MRCA, we again access to a large retail network. And this is very important because the goal is to bring those merchants into our engagement and loyalty system. And post relaunch is about skill and activation across the network. I believe this is will be success in coming months.
Awesome, excellent. And I guess as again, just as we go off of that and kind of close up on some of the catalysts here before we move on to a little bit more financials and some economics, could you tell us a little bit more about your digital wallet and exchange infrastructure and your blockchain ambitions? What role does Web3 play in the broader Z-City ecosystem?
Yeah, this is a longer term layer, also long term strategy. This is about enabling more flexible value exchange inside the ecosystem. So we make it more transparency and also the future digital utility. It's not the core revenue driver today, but part of the border platform architecture. Now we are building it. And we believe for coming another audience pool, especially for the digital finance. So this wallet definitely we can tap to the market.
Excellent, excellent, great stuff there. Good way to wrap up. I think that segment, and I think move on to or switch gears a little bit into some of the financials and economics that we've been seeing. It looked like in your latest results showed third quarter revenue up 125% year over year, and 9-month revenue up 135% actually, led by more than 6x growth in product and loyalty program revenue. I thought that was super interesting. Wondering if you could talk about what's driving that momentum and how repeatable is this? Yeah, and sustainable, really.
Yeah, sure. This revenue growth is mainly driven by the higher transaction activity every day and also stronger contribution from the platform and also our loyalty program. But more important that the headline growth is engagement deep. So normally users are transacting more frequency and more consistently. That's why we drive monetization over the time.
Excellent. And I think we've definitely seen that translate a little bit to your balance sheet. So you've strengthened the balance sheet meaningfully over the past year. How does your current liquidity position support the investment roadmap, and what are your funding priorities from here?
Yeah, basically we are strengthening the balance sheet, which gives us more flexibility. And we are also prioritizing three areas. First is scaling the core platform, expanding the enterprise and AI, and also improving operation efficiency. And we are investing, but in a disciplined way.
Great, great. And just kind of, as we look at the company as a whole, you're still kind of in an investing phase. And I know we're still seeing, some net losses, but wondering if you could walk us through the path towards improving margins. Where does operating leverage show up first for you?
Excuse me. Yeah, we are still in the investment phase, and margin improve as revenue scale faster than fixed cost, and especially in technology and platform development. And the key things is to watch an engagement frequency, repeat transaction, and monetization per active user. Those are the real indicators of efficiency.
Awesome. No, that's excellent. I appreciate you kind of calling those out too. That was actually going to be a follow-up of mine is kind of maybe what operating metrics we should look at. And but I think those are great ones to keep an eye on as we watch you kind of scale your margins. Um, so if we switch gears again, I know we're coming closer to, the top of our time here together, but we do want to squeeze in, just a few more here. When we look at the market opportunity and kind of competitive position, you're at roughly 8% penetration of Malaysian internet users. I think from the latest data with 2.7 million registered users. Significant headroom there, especially, at home in Malaysia. At the same time, you've outlined expansion into Indonesia, Vietnam, Thailand, the Philippines, plus Japan too, across 2025 to 2028 in your rollout. How do you sequence, really home market growth versus your regional expansion?
Yeah, Malaysia sure is still our foundation. So started we are focused into Malaysia, but we use it to refine the model, improve the scalability. That's why we will continue to expand step by step into the Southeast Asian market and with the similar digital behavior. Because this is a neighboring country and their spending habit, spending power is actually quite similar with Malaysia. That's why we are still focused in Malaysia and we're coming to expand to other countries as well.
Perfect, perfect. Exactly what we're trying to get at there. And then, of course, the region does have some giants. You have Touch and Go, we have GrabPay, GoTo, Shopee. I think your company has described, and you've in past, sayings have described a co-opetition approach almost. So operating as a rewards and merchant engagement layer on top of dominant payment rails rather than competing head on with these companies. Can you explain that positioning, why it works for SME merchants in particular?
Yeah, as I shared just now, we are the aggregator. Actually, we are not trying to replace any payment system or any super app. Actually, we are sit atop that as an engagement and loyalty layer. That's where we add our value and helping the merchant and especially for the small medium enterprise to get the better retention and repeat customer without needing their own complex system. So in many cases, we actually complementing existing ecosystem rather than compete with them. That's why we are the aggregator super app.
Excellent, excellent. Again, really great, very great on kind of the market opportunity and competitive positioning there. And I think, as we look to kind of close out some of our topics here today, you've recently actually stepped back into the CEO seat. Wondering what your top priorities are for the next, call it, year to 12 months and how you define success a year from now.
Yeah, as an acting CEO, so my focus over the next 2 months is very clear. So this is a come down to the three priority. The first one, sure, we want to increase the monetization for our existing user face and do more channel. And second, scale our enterprise and also AI revenue stream. And last but not least, to improve the operational efficiency and move towards sustainable and profitability.
Awesome, awesome, excellent. Not, I don't want to, be too repetitive here. I think you kind of touched on some of these, but maybe if there's anything deeper you could go into here, what would you say the key milestones investors should look for over the next 2 to 3 quarters? Really as proof points that the strategy is working.
I think for investor, there are three key signals to watch. The first one, sure, is a stronger engagement trend across the platform, and growth in the enterprise contract wins and pipeline conversion, and also early revenue contribution from our AI initiative. And together, this will demonstrate the execution is on track.
Awesome, awesome, perfect. And really almost just I think for our last one here, and maybe last two actually, I'll kind of I'll split this into two here. Um, for the investors listening today and listening in the future, what's maybe like what's maybe the one thing that you want them to remember about the Treasure Global story? And secondly, is there anything from today's conversation that you think we've missed, not touched on, or you just want to highlight more before we finish off here today?
Yeah, sure. I think Treasure Global today is more meaningfully different from a few years ago. We start as a just city, but now we are already start for other business as well, and also do more diversify for our ecosystem. I think we will evolve from a reward-based platform into the broader digital ecosystem that combine consumer engagement, merchant on board, and also amazing AI capability. Now we are still early in the journey, but the direction is very clear. So execute consistently, improve monetization, and also build a scalable and sustainable business over the time.
Excellent. That's perfect. Thank you for that, Sam. And I think that also brings us to time for today. So, Sam, really, thank you so much for joining me
Yeah.
today. And thank you for everyone else that's tuning in today. So really don't forget to subscribe to the On the Horizon podcast and visit watertowerresearch.com to stay up to speed on all of our small cap research reports, podcasts, fireside chats, and conference schedules. We definitely look to have Sam on again as we look to dive deeper into the story throughout the year. We'll see you next time on W2 or On the Horizon.
Okay. Thank you.